Hello everyone. I hope now you have understood the logics of accounting equations very well. In case of doubt, please write the same in the comment section below or mail us in the email provided in the description. Now coming back to the topic. In this video, we will learn about journal entries. In order to understand the concept more clearly, we will continue with Jethalal's story in the background. If you remember, Jethalal was sitting with his CA to understand about accounting equations. Now his CA moves forward and starts explaining journal entries which are passed in the books. Journal entry is passed in journal books, which is also known as primary books. Any transaction is first recorded in journal books before being recorded elsewhere. Here you can see format of journal book. Basically, it consists of 4 columns. First column represents the date, which tells us about the date in which the transaction was recorded. Second column mentions the accounts which are involved in the particular transaction. Third column mentions the amount which is debited to a particular account. And the fourth column mentions the amount which is credited to a particular account. Value of third and fourth column shall always be equal in order to record transactions correctly. This is done in order to honor the accounting equation, that is, asset is equal to liability plus capital. In other words, it is also a cross-check to know whether all components of transactions are properly recorded or not. In order to make journal books simple, you can imagine the same as personal diary of business. In a personal diary, we generally write date and whatever incident happened on that day. And this helps us to recollect our memories in future also. Similarly, in journal entry we record date and whichever transaction happened on that day along with date and the amount involved. This helps business to recollect its transaction in future date as we recollect memories from a diary. Now, after understanding the concept of journal books, we will record all those transactions which we saw in our opening slide and also the ones which we recorded in accounting equations. For those who are unaware, I have mentioned the link below to both the videos in description. Do brush up those before moving forward. You will be able to link the journal entry with the transactions that happened in the business. The first thing that happened over here was Jethalal investing his money in Gada Electronics. Now do remember, journal entry is made for Gada Electronics and it has separate identity from Jethalal. Hence, in order to record this first transaction in the books, 2 accounts are created. One is cash account and another is capital account. If you remember, types of accounts and accounting rules applicable, cash account is a real account as it records asset of the business, and capital account is personal account as it represents Jethalal who is physically present. Now applying the rules of account, cash account is debited as it is coming into the business and capital is credited as it is giving something to business. Second thing which Jethalal did was to take loan from ICICI Bank for 3 years. Now to record this transaction, one more account is created, that is loan account. Over here, ICICI account is a personal account as it is an organization and physically present. Again, applying the accounting rule, cash is debited as it comes in and ICICI Bank is credited as it is giving something to the business. Third thing which Jethalal did was to purchase 2 TV sets from LG company. Now in order to record this transaction, we need to create 2 more accounts. First, purchase account. Now this account is nominal account as it is not physically present, but made to show the expense in profit and loss. And the second account is LG company account, which is a personal account as it is physically present. Now applying the accounting rules over here, purchase account is debited as it records expense of business, and LG company is credited as it is giving something to the business. Fourth thing was purchase of furniture from IKEA on cash. Now only one account is created, that is furniture, and this is a real account as it is recording asset of business. Now you must be wondering why IKEA account is not created, right? The answer is very simple. After recording this transaction, Gara Electronics will have no future transaction with IKEA as they will pay their money on this particular day itself. To make it more simple, suppose you have two friends and suppose to both of them you have given chocolate in exchange of money. One friend gave you money and the another friend told you that he will give money after 10 days. Now after 10 days, you will have to ask money from the friend who has not paid. Hence, you will write his name in your diary in order to complete the exchange. Similarly, business also records the name of those person and organization with which they need to deal in the future. Hence, LG company account was created as it will have to pay money after 2 months, but IKEA account is not created as it has paid the money on that day itself. Hence, entry passed would be furniture account debited as it comes in the business and cash credited as the money goes out of the business. Fifth thing was paying Tapu's school fees from capital account. Again over here, we will create a new account, that is drawing account. And this is a personal account in nature. Reason being, it belongs to Jethalal who is physically present. Since drawing is taking something from the business and cash will be credited as it is going out. In order to close the drawing account, balance is transferred to capital account. Since both the personal account and capital account is debited, as it is receiving and drawing is credited as it is giving. If you remember, in accounting equation there was no concept of drawing. This transaction was recorded simply by reducing capital and cash. Here also if you see both the entries together, ultimate impact is cash account is credited and capital account is debited. In short, it is the reversal of first entry passed, that is investment of money, since it is the opposite of what is done there. After that, one TV was sold to Mr. Hathi for rupees 0.20 lakhs, that means 20,000. Here, in order to record this transaction, two new accounts need to be opened. First is sale account, which is nominal account, since this account doesn't exist physically and only purpose is to record income in profit and loss account. And the other account is Mr. Hathi's account, which is a personal account, again because Mr. Hathi is physically present. Now to apply the rule of accounting, Mr. Hathi is debited as he is taking something from the business and sale is credited as it is recording the income. Last thing which Jethalal did was the payment of electricity bill. Again, to record this transaction, one new account is created, that is electricity cost account, and this is a nominal account. To apply accounting rule over here, electricity is debited and cash is credited. Now after recording all these transactions, following account is created in Gara Electronics. In the table mentioned below, You can find the list along with type of accounts and the reason why it is classified into that type. If you notice, those accounts which exist physically, either as a person or as an organization, is classified as personal, and those account which only records asset and liability of the business is classified as real, and lastly those account which don't exist physically and its only purpose is to record expense and income for the purpose of presentation in profit and loss account is classified as nominal account. Now, there are some key points which we need to remember and their rules also. Whenever an asset enters the business, may it be in any form of cash, furniture, its relevant account is debited, and whenever an asset leaves the business, its relevant account is credited. Similarly, when any liability enters the business, its account is credited, and when any liability leaves the business, its account is debited. When any person or organization gives something to business, whether it's cash, goods, or service, his account is credited. And just vice versa, when any person or organization takes something from business, his account is debited. All the expense will always be recorded in debit side, and all the income will be recorded in credit side. If you remember this very simple rule, there will be very less chance that your journal entry will be passed wrongly. Hope this video helps you to understand different types of accounts and its rules more clearly and how the same is implemented while passing a journal entry. Do like, share and subscribe for more videos. Also, in case of doubts or problems related, do share the same in the comment section or email to us. Our email ID is mentioned in the description below. We will surely upload its solution within 2 to 3 days. Thank you.